Assalamualaikum and greeting to our lecture. We are from Group 15, consisting with 8 pupils, namely Muhammad Imran bin Hamdan, Khairul Aiman bin Sharnizam, Muhammad Fawaz Adli bin Kaharudin, Halifah bin Tarsat, Najwa Atira binti Kamsa Elias Kamal, Nurul Nadira Rosli Elias Muhammad Nur Azman, Putri Sofia Nur Naziha binti Abdul Razak, and Nurul Fazira binti Muhammad. We're going forward to question number 1. Payment method used in business include cash, QR to the most complex. First, cash is money in the physical form of currency such as banknotes and coins. Advantage using cash, one of the most common and easiest form of payment. Many customers will accept you to accept cash. You won't have to pay any fee to accept cash. Second, check. Check is a document that orders a bank to pay a specific amount of money from person in whose name the check has been issued. Advantage use check, mainly customer to make more frequent or large purchase. Also, check allow customer to safely make large purchase. In addition, you won't have to keep as much cash in your store. Third is debit, credit, and prepaid card. Allow customer to safely make large purchase. Debit card also can be quicker and more convenient for customer at checkout than cash or check. Credit cards allow foreign traveler to more easily make purchase.
Next method of payment in business for number 4 is a QR code. QR code is a type of a barcode that can be read easily by a digital device and which stores information as a series of pixels in a square-shaped grid. QR codes are frequently used to track information about a product in a supply chain and often used in marketing and advertising campaigns. It is contactless payment options for customers who want a hand-off experience and enabled in all smartphones and does not require a specific application for customer to access. Next is autopay. Autopay is a computerized service that automatically deducts an old recurring payment from an individual's account, usually a checking, savings, or money market account, in time to meet a payment due date. Autopay can usually be set up directly with the company receiving payment or through the payment service of one's bank. Autopay can be set up to make many types of payment, including recurring payments for a bank loan, a credit card, a utility bill. Using an autopay for recurring base ensures timely payments and the avoidance of late fees. And last is number C, email invoicing. An email invoicing is a type of invoice that is sent through email to a client or customer, allowing for easier billing or digital payment through a variety of different businesses that allow for secure and fast payments made over the internet. These type of invoices are usually similar in appearance to standard paper invoice with all of the pertinent information and contact details included, though they are often simpler to organize as they do not require extensive paperwork. It also can allow us to streamline the reporting and manage data securely, connecting with a CRM and accounting system.
What are the additional documents needed for making international payments? The additional documents needed for making international payment is a bill of lading. Bill of lading is a legally document that represents ownership of cargo, the negotiable document to receive cargo, and the contract for cargo between shipper and carrier. Bill of lading, it is to provide the evidence of shipment that really important, especially to the international trade, as it provides title as to who legally owns cargo. And lastly, a document which prove that the goods have been shipped. The buyer will be assured that the seller has fulfilled the necessary steps and the goods will reach him or her safely.
Supply contract. An agreement by which a seller promises to supply all of the specific goods or services that a buyer needs over a certain time and at a fixed price, and the buyer agrees to purchase such goods or services exclusively from the seller during that time. In international markets, a supply contract is often necessary in order to lock in discount pricing and other benefits that the supplier is agreeing to provide to the client for a specific period of time. The terms of a supply contract often define everything from the means whereby the products are delivered, terms of payment, and any other aspect of the relationship that the two parties have determined to be necessary. The supply contract protects the rights of both parties. The client knows what to expect in terms of the goods received and how they will be delivered. In turn, the supplier knows what the client is likely to need and how payment will be submitted.
Next is the additional documents that needed for making international payments is letter of credit. Letter of credit is a contractual agreement whereby the issuing bank, that is importer's bank, acting on behalf of the customer, that is the importer or buyer, agrees to pay the beneficiary or exporter upon receipt of the required documentation. Usually, the importer's bank will pay the exporter by using intermediary banks to ease the transactions. A letter of credit also referred to as a documentary credit. The advantage of a letter of credit are one of the most flexible and safe instruments available to international traders.
Type of banks and trade services from Thai, Marang and Fawaz.
Commercial bank. First, letter of credit. This is a financial instrument issued by a bank on behalf of the buyer to the seller. It guarantees payment to the seller as long as the term and condition of the letter of credit are met. Second, documentary collection. This is the service that allows the seller to request payment from the buyer banks after the seller has shipped the goods and present the required document. The bank acts as an intermediary between the buyer and seller, verifying that the documents are in order before releasing payment. Next, trade financing. This involves providing financial assistance to business to help them import and export goods. It can take the form of loans, guarantees, or other financial instruments. Last, export credit insurance. This is insurance that protects exporters against the risk of non-payment by a foreign buyer.
Next, investment bank. Investment bank is a financial service company that acts as an intermediary in large and complex financial transaction. Investment bank offer a wide range of service, including trade finance, which is provide trade finance service such as letter of credit, documentary collection, and trade finance to help business import and export goods and service. Next, foreign exchange. Investment bank may offer foreign exchange service to help business manage currency risk when trading internationally. This can include spot and forward contract, currency option, and currency swap. Trade finance advisory. Investment bank may provide advisory service to help business optimize their trade finance strategy and structure transactions in the most effective way. This can include assistance with trade finance documentation, structuring trade finance facility, and identify suitable trade finance solution. Trade finance structuring. Investment bank may work with business to structure trade finance transactions in a way that meet their specific needs and objectives. This can include structuring trade finance facilities, structuring trade finance instruments, and helping business to access trade finance facilities provided by other financial institutions.
The last but not least, Islamic banking. Islamic banking is a form of banking that is based on principles of Islamic finance, which prohibit the payment of interest, which riba, and require the use of asset-based financial structure. Some trade services offered by Islamic bank include Murabaha. Murabaha is a type of trade finance that involves the sale of goods on a cost-plus basis. The bank purchases the good on behalf of the customer at a market to the cost and sells the good to the customer at a profit. The customer pay for the good in installment over an agreed period of time. Then, Musharaka. Musharaka is a form of trade service that involves the establishment of joint venture between the bank and the customer. The bank and customer contribute capital to the venture and profits and losses and share according to a predetermined ratio. After that, Ijara. Ijara is a lease-based trade service solution that involves the bank purchasing the goods on behalf of the customer and leasing them back to the customer over an agreed period of time. The customer makes periodic lease payment to the bank, and ownership of the goods is transferred to the customer at the end of the lease period. And Salam, the last but not least, is a forward sales contract with which the bank agrees to purchase goods for the customer at a future date for a predetermined ratio. The customer receives payment upfront, and the bank takes possession of the goods when they are delivered at a later date.